All right, Jim Carroll. Happy New Year to you. I know it's the 24th, but I could still do that. And welcome back, my friend.
Hey, thank you, Coach. Sorry to hear you're still under the weather, but hopefully you'll bounce back real soon.
Yeah, I appreciate those sentiments. And speaking about bouncing back, I know you have a presentation to share with us about VIX. Any chance of that ever bouncing back? Or will I bounce back?
Fair question. Fair question. If only we knew for sure. Can I grab the screen?
I looked at some great work that you sent me the other day. This is a great review because there's so many points that you know everyone was wondering why the VIX is broken. The VIX is broken, and last time you were on, you said that despite the decline we had in the markets, that money was being made all last year selling vol in a 20% decline in the S&P's. Selling vol worked. Tell us why it did.
Okay. Why it worked was because, in a nutshell, and it's not specifically in the slides that I'm going to run through. We had VIX as a measure of implied volatility in the mid 20s the whole year, pretty much. That was certainly the average. A 25-26 average VIX implies, call it a 1.5 to a 1.5-ish daily move in the S&P. And if you look at the stats, and I will hit on this, we were in that zip code.
Yeah.
And for every tick down, we had to tick back up. So realized vol was high, implied vol was high, but we never got the sustained surprise crash that would have caused volatility to really spike. Let me jump into the slides because I've got a lot to cover. I apologize for people who don't like slideshows, but let's go. So if
I like them.
if 2018 was the year of the volpocalypse, which most of us remember February of 2018, I've dubbed 2022 to be the vol anomaly.
I like it.
And so just visually, you can see that coming out of the pandemic, 2021, we had some VIX spikes, but levels were relatively low. 2022, in spite of people saying the VIX was broken, we had, several trips north of 30, which we only saw twice in 2021. So there was more volatility. It just felt like it wasn't as much as it should have been. Again, looking at annual ranges and averages, we had a narrower range for VIX, but the average level of VIX definitely ticked up over 2021 and actually was at its highest level, outside of 2020, going all the way back to 2009. So if VIX was broken, its average level was certainly saying there's volatility in here.
Yeah, it was a different regime.
It was a different regime, but because we never got those ugly spikes, selling volatility did prove to be profitable.
Okay.
Again, here's another perspective. Even though VIX spent most of 2022 in the mid 20s, it didn't move as much. If we look at average VIX points per 1% change in S&P, 2021, you had a much more responsive VIX than you did in 2022. And 2022 was the least responsive. You got to go all the way back to 2003, coming out of the internet collapse, to find a year when VIX was less responsive to changes in the S&P. So, there are reasons that people felt it wasn't working. It was anomalous, but, I contend that it was working. It was just working on the outer edges of what we could reasonably expect. Another break with expectations. there were 50 days in 2022 where the S&P 500 and the VIX both dropped.
Yeah.
If we look at that on a trailing 1 year basis, 252 trading days, we just haven't seen that level of correlation really ever. And so that's definitely something that caught people by surprise. Looking at it visually, we had the high for VIX in March as the S&P made its Ukraine low. What really got people PO'd was we went on to make lower lows in the S&P twice, and we just didn't get VIX to go higher in either scenario. People were already either hedged up or had reduced their equity exposure. And so, there was no bid for fear at that point. Okay. Looking at the VIX futures, right? So different than the VIX futures tradable. And this is basically looking, we've got VIX futures contracts that expire every month. They roll every day. So, looking just at the front month is confusing. So what I do and what a lot of people do is take a 30-day constant maturity of the VIX futures using the front 2 months. And again, not unlike VIX, we can see that the trading range in 2022 was relatively narrow, but the average level for this measure of implied vol did tick up, just like VIX did. So, not broken.
So they're trading those live now in auction on the floor. I talked to a guy, I think from SIBO, and you ever trade them?
Trade
the VIX futures?
Oh, I use the exchange traded products, which
Okay.
use the VIX futures. Again, look, I'm lazy and stupid. I don't like dealing with how many days to expiration do I have? When do I want to roll from the front month to the second month? Do I want to short the front and long the back? Yeah. I leave that for people a lot smarter than I am. So I use the exchange traded products, which again give me this sort of constant maturity exposure to VIX futures, and I let somebody else do the trading for me. Well, I trade the products, not the futures.
Yeah, I wouldn't think that it would have the same decay feature that the products do. Futures. Do they?
Absolutely. Yeah.
Okay.
You're seeing again. You're seeing roll in the VIX futures themselves, and certainly there are a lot of people out there who like to go to the futures and trade them directly, either long or short, or again you can construct what's effectively a calendar on the term structure. There are people, there are a lot of people who use the full extent of the VIX futures term structure to, put a trade together just the way they want it to. Okay. And those guys and ladies are, a lot more steeped in it, and God bless.
Hey, Jim,
I don't want to compete with them.
Okay, but before I forget, there were some strange openings in VIX over the last few months where out of nowhere, they would just gap up. Okay, and they were pretty big gaps from the prior day. And, I would look at it and go, is there something going on? I mean, eventually they filled every one of those gaps. It almost feels like, were they pumped so people could sell into them? What caused those big opening gaps that we had in the VIX over the last few months?
That's a good question, Dale, and I must say that it hasn't caught my eye. One thing I have seen historically is that you'll get some what looks like funny business pre-open, and I've talked to people who are deep in the weeds in VIX and SPX options. And remember, the VIX is calculated off of SPX options, so if there are weird things happening in VIX, it means that there are weird things happening in the underlying SPX options.
Okay.
And in some cases, It literally is people, you know, making
Gaming it?
adjustments, or making adjustments in their books, pre-open.
Okay. Yeah.
And so you do see, again, some anomalies from time to time. I tend to not pay a lot of attention to them because, as you suggest, they tend to iron themselves out.
Yeah.
And particularly when the regular trading day begins, when you've got the full liquidity of the market behind the underlying SPX options, these things tend to smooth themselves out.
Okay. Thank you, Jim.
Sure. So one, in my opinion, underused measure of implied volatility is Scott Nations, for people who don't know, and Nations Shares has come up with an at the money implied vol. Again, for people less familiar with the VIX looks at a full string of SPX options, at the money, out of the money, up and down the full chain, and calculates the VIX. A long time ago, Scott said, that's silly, because why are we letting deep out of the money stuff determine what we think implied vol is? Let me just measure it at the money. And so I use volley as another measure of implied vol, and as we'll come to, I use it with VIX to see what that's telling me. Volley, again, not unlike VIX in this scenario, fairly narrow range, but an uptick in the average level for 2022. Working. VVIX, the volatility of VIX, lower lows and a lower average than 2021. So VIX was relatively high, as we've shown before, but investors expected VIX to be less volatile on average in 2022. So again, it kind of went counter to what people thought should happen with the equities trading off. But basically, people were saying, we think VIX is in the right place, and we don't expect it to have huge movement. Going back to VIX and volley. So if VIX includes out of the money options and volley is only at the money, looking at the spread between the two is a measure of the appetite for out of the money options. And to me, it's an interesting gauge of fear, in the sense that if VIX is a lot higher than volley, then people are bidding up out of the money options. And that's an expression of a desire to hedge or participate in what people see as big upside, because it could be puts or calls. What we saw, particularly in the second half of 2022, was that quote unquote fear spread really went down and stayed down and closed the year, basically at almost zero.
The low.
So
yeah.
Not a lot of fear in the market as we ended the year and moved into 2023.
Okay.
From a longer term,
Yeah.
From a longer term, well, and let's not forget that if you spent 2022 trying to hedge your portfolio, and we'll come to it, you had your head beat in. The hedges weren't working. So you get to the end of the year, you say, screw it. Who needs hedges? From a long-term perspective, that spread, again, relatively narrow in 2022, and the average dropped. Less fear. So if there's less fear, maybe VIX wasn't broken after all.
Yeah, who needs fire insurance anymore?
Who needs fire insurance? My house is fireproof.
Yeah.
Shifting just to realized volatility quickly, looking at the 21-day realized volatility for the S&P 500. We had an uptick in realized vol, and I'll show you why. This graphically shows, there is this standard relationship. The VIX futures typically are at a premium to the spot VIX, and the spot VIX is typically at a premium to realized volatility. Obviously, realized volatility is backward looking, so there's going to be some lag. What we did see in 2022, it all got pressed together. So there was a lot of realized vol, if anything. And again, this is one of the reasons people say, well, the VIX should have been higher. Look at where realized volatility was. Okay, but it wasn't. It's an anomaly.
Okay.
Why? Well, we saw 7 distinct drops of at least 7% during 2022 in the S&P 500. Okay. We also saw 7 rebounds of at least 5% that contributed to that realized volatility. So, we were up and down and up and down and up and down and up and down.
It was orderly.
Well, it was relatively orderly.
Okay.
And every time you might have thought that things were going to just fall out of bed and collapse, they stopped and turned around. So again, a tough market to be a hedger unless you are a swing trader. And no surprise that realized vol was elevated. Hedges didn't work. Okay, simple way to look at it. P-put buys the S&P and sells 5% out of the money puts. VXTH buys the S&P and buys VIX calls. As you can see, P-put basically performed in line with the S&P. The put protection really didn't help. More interesting, owning, the VIX tail hedge, buying VIX calls, they were relatively expensive. And so that actually took performance away from you. So if you get to the end of 2022 and you look at this and you say, crap, these hedges ain't working, you're either going to abandon hedges or you're going to just say, let me just reduce my exposure on the equity side. And boy, right now, maybe you're even saying, holy crap, I can get 4% in treasuries. Maybe I'll just rebalance my allocation. Maybe the 60-40 is going to work in 2023. I don't know.
Okay.
VIX spikes. 2022 just didn't have the big spikes that we've seen in the past. This is going all the way back to basically the beginning of VIX and all the different events where we've seen, big moves higher. We didn't see those in 2022. But there were 6 unique VIX spikes of at least 7 points during the year. And essentially what I'm looking at here is a move 7 points above the 21-day VIX low. So we're at a low and we've moved 7 points higher. And then I'm eliminating, overlaps, spikes that, might dip back below and then jump up higher again. So, we've never had more than 6 in 1 year. And 2022 was a year when we had those. So again, not unlike, the reversals up and down that we saw in the S&P 500, we saw some significant reversals up and down in VIX.
Okay.
Streaks above 20, VIX was above 20 for a significant period of time in 2022. So, once again, it was elevated. It just didn't get as elevated as people wanted it to. Contango and backwardation. 2021 was as boring as it gets in terms of the VIX futures term structure. 2022, we saw a bounce back. We spent a meaningful chunk of 2022 in backwardation. Simple measure. The front month of VIX futures is above the second month of VIX futures. If you want to get more complicated than that, God bless. And again, looking at streaks of backwardation, there were 2. Again, historically, that's not a big deal, but it's also, above average. One more way, and the hot topic in vol markets, in the option markets in 2022 was 0 DTE options. We don't have a standard measure of, 1 day implied volatility yet. People are working on it. We do have a 9-day measure of implied volatility. And so, looking at how that behaved during the year was interesting because there were a bunch of days when VIX 9-day, again, reflecting the shorter term implied volatility, was higher than VIX. It was a big spike, even over 2020. And to me, that's giving some sense of the impact of short-dated options activity in the vol space. It's definitely a tail that seems to be wagging the dog pretty hard. Overall, using the SIBO, 5-point term structure, we started the year in beautiful shape, the green, strong contango. We spiked up to the biggest levels in March, when we were all trying to figure out what was going on in Ukraine. By the time we got to the end of the year, we were back down significantly, still above 20 across the board. Obviously, in January, we've ticked back down again. So we're relaxing. We're very calm right now. And it just visually, in terms of historical levels, we started the year at the 24th percentile. We finished the year up at the 66th percentile, and we peaked in March way up at the 97th percentile. So again, these are not out of line historically. And from a longer term perspective, the way I look at things, and everybody's entitled to their own view, we remain in a higher volatility regime where the trailing 1-year moving average of VIX is greater than 20. So, we've gotten above 20, we've kind of stuck above 20. And historically, when that's happened, we have seen, sustained bouts of volatility. Does that mean 2023 is going to be volatile again? I wish I knew. I suspect that it's possible. We've got a lot of known unknowns to deal with. So, I've touched on all of these points. I think the outlook for 2023, what's the Fed going to do? Higher for longer, pivot? We're going to have a recession. If so, how bad? We got people laying people off all over the board. We're in the fat part of earnings season. What's going to happen to earnings and market multiples? Russia, Ukraine, China, Taiwan, dysfunctional Congress. To me, the surprise for 2023 would be smooth sailing through all of this. Mid to longer term expectations remain elevated. And so, and at the same time, investors appear to be unconcerned about potential tail events.
Completely.
So if people are uninsured and something bad happens, we may see an uptick in volatility. How's that?
Okay, let me ask you this: how are VIX calls priced now? Overvalued, fair valued?
Well, if you look at where VVIX is as sort of a measure of vol of all, and if you talk to people who are in that game every day, they look relatively inexpensive. And again, if I go back to this one, if I look at the difference between VIX and at the money VIX as a measure of, risk appetite, it is bumping along historical lows. Nations also has a tail index. It is in the bottom percentiles of its historical. So, the answer is VIX calls appear to be relatively attractive.
Okay.
But what's the payoff? I don't know.
Right. Just being on the opposite side of the majority doesn't always work, but
It doesn't always work, but you know,
but it can.
it can, and when it does, it tends to be pretty convex.
Yeah. What a great presentation, Jim Carroll.
Thank you, Dale.
I mean, really, and even I could understand what you were talking about here today in the VIX, and my head explodes, not just for migraines, but trying to understand these different formulas that people look at to measure VIX. So rooting for you, Jim, and best way for people to follow you is at VIXologists or find you at Taroso. And
you know, the easiest way for most people to both follow and get in touch is on Twitter. You know, I'm there all the time at VIXologist, and my DMs are open.
Nice.
You know, I'm very happy to engage in constructive conversations about markets and volatility. And I'm also happy to block people who are trolls or otherwise misbehave.
Yeah, you know what my theory is on those people? That they're just trying to rationalize their own inadequacies.
You got it, baby.
That's why they root for others to fail. So anyway, Jim, thanks very much. I'll be in touch with you, and we'll get back and see if maybe we will have a pop in the VIX by the next time you and I talk. I think I'm going to go for some June calls.
There you go.
And give it a shot. You know, you don't bet the farm on these guys, but you know, throw a couple grand at some calls and do what everyone else isn't doing right now. Very hard to do because, look, we've seen it. People have to be very discouraged with trying to do what I'm thinking about doing now.
I think you're absolutely right. And, you know, one of the challenges here is that the only way your hedges worked in 2022 was if you were tactical with them. And there aren't very many people who are comfortable or really good at a tactical approach to the markets. And unfortunately, in 2022, that's what you needed.
Okay. Well, tactically, 42 to 4,400 SPX, I'll be looking real hard at them. So
I hear you.
Thank you, Jim.
You're
Appreciate
welcome, Dale. You got it.
All right, Jim Carroll, everybody. People are thanking you, Jim. Have a great winter trading season. We'll talk in the spring, Jim.
Thank you, Dale.
All right.
Cheers.
Adios. And everyone, you can join the team in 15 minutes on the Morning Edge. Remember, don't just count your calls and puts, count your blessings. See you guys tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.